Hey, welcome everybody. It's Mike Smith from Hawkeye Traders. Just going to put something in front of you for your general interest today. And it must be a couple of weeks ago now, we looked at whether GLD was worth a trade, the gold ETF that tracks the price of gold simply because it's the fifth largest holder of gold in the world. So we thought we'd have a relook at it and see where it's at now. And as you see from the Euro USD chart in front of us, which is a daily chart, then we've got the US dollar stronger, the euro weaker. We're now in downtrend on the euro and back within a range that we were in really for almost the entire length of January, between 108 on the downside and 109.90 on the upside, let's say 110. There's a few pips between friends. But we're now back in that range, and one would expect that as a result of US dollar strength, then we would see some weakness in gold. However, of course, that has not been the case. So if we put up a daily gold chart, you'll see that really we've been in quite an interesting time ago, quite choppy. This is GLD that we thought we'd put up because obviously it's tradable to many of you as the ETF or options on the ETF. But of course, it does track the price of gold. So a gold chart will look very similar to this. We see really on GLD, we've got a pivot lower around about 115.50, around this level here. And we've got a high, which relates to this wide bar that closed around 118.75, but actually had a pop at 120 intraday on this wide bar. So really we've looked a couple of times as though we might pull back, and we have done this, a few bars up and then a pullback, a couple of bars higher, then a pullback. And we did see a move up last night with the market selling off towards the back end. And we are actually seeing a reasonable move up in European trading at this stage, which might well re-threaten that 120 mark that looks to be pretty important. Now, in terms of why this might be, when we see the US dollar looking so strong, well, there are a few reasons why people may buy gold, and we've covered this before, but it's worth reiterating because you need to be aware of the assumptions that perhaps you're making about why people are investing in a particular instrument from a fundamental point of view. So if gold's stronger and the US dollar is stronger, what does that mean in reality? Well, there's a couple of things. Firstly, gold, of course, does have an inverse relationship normally in normal markets to the US dollar. So that's not obviously at play. Secondly, gold is considered to be an inflation hedge. And we don't see any inflation kicking around anywhere in the world. So it's certainly not the reason why we're seeing gold at many month highs. Is it demand? Is it that all of a sudden there's a massive demand for gold, for jewelry, etc.? No, that's not it either. We have not seen any evidence of that. So really, the only other major reason that people would buy gold at this stage, with the US dollar going up as well, is from a hedging point of view. So it's that flight to safety, and with little chance of inflation in certainly the medium term and probably the long term as well, and the US dollar back in a range with the euro, then there's every chance we may see some additional buy-in. If it breaks 120 from a technical point of view, that may get people excited. So is it an entry now? Well, not according to Hawkeye. So we need to be patient with this. It will be a green bar on the daily chart. We are in uptrend, but really we need to see it break. Although there's more than 4 bars gone since this wide bar, we would certainly need to see it break the closing high of that wide bar, which really is still the highest close that we see on the chart in front of us. So that's the first thing that we will need to see happen. And to me, it would make sense to use 120 as the line in the sand to entertain an idea of entry. So let's look at the 2-day chart and the weekly chart. And really the 2-day is not that dissimilar. We see a pivot high relating to that wide bar there that we've already talked about, just over 120. And we've got the pivot low at around about 116.50. We haven't got buying volume in on the 2-day, though it may come in on open today. We may see that. We've already got the green heat map. We are in uptrend, so we are waiting for that green bar to come in. The weekly chart, now this is interesting. You can see how this level, which was the close of that on that week where that wide bar was there, around about 118.50, was also pivot highs in June of last year and also in April last year. Preceding that, we had a high of 125 on GLD, so a little over 4% move from this point. And that may give a potential opportunity towards the back end of the week. If we see that green volume across all three timeframes, we retain the uptrend and we get the break of 120, then that may be something to be interested in. In terms of how we play it, well, we're in the balance a little bit here. If we were to place an options trade, we can obviously do a straight bought call position on GLD, one of the more liquid options, particularly with a higher price underlying asset, which GLD is. So we could play it with a straight bought call. However, we might be tempted to put a bull call spread in sort of somewhere around about 123, 124 as our two strike prices. That would sort of make sense. Obviously, if you're trading gold in any other way, the futures, the CFDs, or options on the futures, whatever it is that you're trading, then the rules of the game will be the same. We may get small variances in terms of the volumes we're seeing, but really the bottom line chart is very, very similar. As I said, we're looking strong in futures trading at the moment, which should push it higher, will push GLD back up towards 120. And it'll be interesting to see if there's some follow through on that subsequent to the equity market open. In terms of where the S&P 500 may be, we've been ramming on about this level here on the S&P 500 for most of the week. We have a look at this. We see it's around 1945, 1947 if we take the pivots. And of course, we finished just a little above that 2 sessions ago and then dropped below it again yesterday. So we're not quite ready to break it. If we do, then we're likely to be up around this 2000 level pretty quickly, I would suggest. So a potential move up of around about 50 points on the S&P 500 in the first instance. Again, futures are pointing to a move up, and a lot of that has got to do with the price of oil moving back above $34. So that's our Hawkeye Insider session for today. Track what we've been talking about. If you want an equities trade to look at, we are already in the options portfolio HOG, so Harley Davidson. We still think that is about to pop significantly higher. Just have a look at the chart across 3 time frames. On that, we've used the daily, 2-day, weekly as our time frame. So there's one to have a look at from an equities or options point of view. And of course, there's GLD. And if you want to trade the index, then perhaps if it does break and hold 1960, we might be interested in putting a put spread underneath that, which we can talk about at a future stage. Take care, trade safe. Catch you again soon.